All right. Hello and welcome back to my channel Chart Strength. My name is Zora Tour. Today I'm going to be going over some random charts with you to show you what I am looking at, how I see the market. Hopefully we can take a look at some issues on breadth, some intermarket analysis, maybe some currencies and relationship between a few different sectors and see how that impacts the markets going forward. So let's just dive right in here. All right, so we'll go to my chart screen. All right, so I'm using a different screen recording tool. It's giving up more time, but I can't be that flexible with the screen and how I look on the camera. Okay, let's dive in right in anyways. Okay, let's take a look at our Dow Jones trend lines. See how we're looking. So tons of trend lines being drawn here. The newest one drawn is this top one here. We can see from the peak in January 2022 till now, basically November and February, we've kind of consolidated sideways. The bull in me is thinking that the market is digesting its recent gains from October. We can see this big rush up, massive consolidation zone here now, basically going on for about 3 months. The market probably is making up its mind to which way to go. I've been the bull, a very strong bull since about October, because we've seen stocks really bottom, and I am learning that a midterm bottom, a 2022 bottom followed by a pre-election year like we're in right now, is seasonally really strong. So Q1 and Q2 should be really good for us. So that's why I think we've got more upside to go. From the MACD perspective, we've seen sort of momentum fade, which is obvious because we've seen price here pretty much stall. Okay, now I've got a monthly chart of the Dow. And again, same picture is being shown here, is that we've basically paused and it's holding tight right at its 20-month moving average. I think this could be attributed to the fact that there's been a somewhat of a rotation out of value, the older names, and maybe now into small cap and tech. Typically, small cap and tech do exhibit the most amount of strength in Q1 and Q2. So that might be the reason why we have this. So we still have more room to go on the Dow. And this is another monthly look, but with a 50-month moving average, well above the 50-month moving average. So I think you can easily argue that we're still in a secular bull market, and that the secular bull or longer term bull is not in the pictures yet. But we do have a lot of room to go. So the bear can still come out of its cave. This chart is really more to see like a very long-term look. There's apparently this 60-year cycle that precedes the market, and basically what it's saying is we might have another cyclical bull run from now until 2026, and then from there on there should be a pretty choppy period where there's a lot of sideways action. Who knows how that works? We can see that in 1960 to 1980, which was a almost 25 year period where there wasn't a substantial move in the market. Okay, what else can I show you guys? Oscillator study. So what I was actually trying to figure out here is whether in an uptrend like back here in June, does the stochastics oscillate above the 80 line, above 65 or so? Does it oscillate? And so that's what we saw back in the spring, and now we're taking a look at the current time, and we're seeing some movement. I would argue this is another one. This today and this week might be the last sort of leg to steam higher. or we probably see more consolidated move to the side. I put on trades. I basically tripled my exposure. I wasn't exposed a lot, but I tripled my exposure to the Nasdaq based on some strength heading into March. I think the February weakness was overdone. Dipped my feet. I still have a lot of cash to go, and we'll deploy it. Part of the reason was because price was hovering around its 10-day moving average, and that's sort of a rule I've created, is that if the stock is in an uptrend and if there's any, up and down in price, if it's hovering around its 10-day moving average, it might be a good idea to nibble away. If price gets down back to its 50-day, the blue line might accumulate some more. Okay, and the 200-day moving average has started to move sideways. Does this mean we have some strength coming into the market? We'll see. I think sort of like my other videos and other talking points, the market's really hinging right now on inflation data and jobs data. So we'll see how that turns out. We just had an inflation report. I'm going to have a deeper dive into that. Hopefully by the end of the week, I can get to that video and upload it. Finding it a little bit difficult to edit, to be honest. Editing is not my thing, and I'm working on a PC, so it's not super fast. And my camera it's all right. It's a vlogging camera from Sony, but yeah, still lots of learning to do on how to make videos entertaining, engaging. I think that's the biggest thing, is engaging. There's tons of things we can talk about. How much time do we have? Okay, we've only in 7 minutes into this. This is the Nasdaq daily. What did we just look at? Yeah, we were looking at the Nasdaq again. Another little bit of a longer term look. Had some major trend lines. We've broken that, and we're starting to rally up. A lot of people on Twitter were expecting that this period was going to turn out like August and turn out like March, where you had the massive rally up and then it petered down, massive rally up, petered down. We've had a rally and it hasn't given way yet. And I think the closer we get to March, the less likely we have a move down. So fingers crossed that we get a move up, although our trading coaches will tell us that we can't be having any hope. Hope is not part of the discussion. It's not part of the formula. Here's a broken bear that I was drawing. I'm really obsessed with broken bears right now. I think it's a pattern that works really well in the market. It occurs over and over again. The trouble is finding them, and I think trading around them is super easy. You create stop losses, put in profit targets. You can be pretty consistent, but finding them can be kind of hard. I got carried away, I think, with my short-term 195-minute chart here. I was expecting a pullback. I was way off. I was like off by several hours based on this metric, but close, but off. You can't be close. You have to be precise. Sorry, the audio here sucks. I sit right in an office by a main road, so if there's a lot of audio issues, that's why. Waiting for a pullback to add risk. We did do that. We got a pullback, added risk. I think this pullback was meaningful. It was from basically the 1st of February till February 13th, just a few days ago. Momentum has picked up over the last two trading days, but doesn't look that great. I would still say the move is probably to the downside. After reading my book on the Trader's Almanac and come into my trading room, I think it's so important to not think about how much gain you can get on your trade. I think it's natural for the stock market has this natural upward bias. So if things are going to move upwards all the time, what sucks is moving down. So if you put a stop loss, you won't suck so much. You won't have those shitty feelings, and you'll retain a lot more in your portfolio. But we'll see. Okay, let's see how's the Nasdaq doing on a monthly chart. I think this is my caution page. Yes, so here, am I still connected? I am. Here I had a 40-month moving average. It's been a pretty good area of support back in 2015, 2016, and 2019 and 2020. It's held up. Right now, we have price above it. It broke below and broke back up. Looking back in history, when price moves above a long, stable moving average like this, it rewards you to be on the long side. So it's another reason why I eagerly want to have exposure to the market, because I obviously FOMO don't want to be left behind. But that being said, we still have our stop losses in place. They can be small, they can be big. I think it's just good sense to, it's prudent, it's really prudent to draw a line in the sand, because man, I know so many people personally that just like retired from the stock market or had big wins and then big falls. They had a lot of money, they brag, they talk about it, and then shortly after they're depressed and they can't sleep. um, I don't want that. um, I'd rather stay in the game as long as possible and continue to compound my money, maybe a little bit slowly, maybe too fast, maybe in the middle, whatever. Just want to compound my money. Okay, so we're at 12 minutes here. So back to our line here. Momentum has picked up, which is really good. It's not decreasing. Price is above our moving average, our 40-month moving average. On balance volume is holding above its long-term point. So all in all, there is some strength. I think there is reason to be optimistic. This is just a fun chart. I shouldn't be drawing these kinds of things. I was thinking that they kind of put in your head what may make you trade a certain way. It's not the best strategy to have. Yeah, I really should just move on from this chart. It's ugly. Okay, here's my favorite chart. It's the messiest of them all. It's the one that I am drawing up a lot. And this one is following the S&P 500, and it's got a 10-day moving average plotted with the MACD histogram above with a volume below. I will say I find myself not using volume as much as I should, although textbook after textbook tells you that volume confirms the action. So yeah, where are we? Okay, so again, from a cautionary point of view, the MACD histogram momentum has faded and price failed basically where I've drawn this. It's starting to become relatively easy to draw these. The issue is drawing them too early and then acting on those. Another mistake of mine is acting on these. I think it's better to just sort of have them a mental watch in your head, especially to the upside. I think you really want to guess more where the price is going to go on the downside and less on the up, because you'll lose less. So what do we see? MACD has gone negative, but price is kind of holding up. It's definitely holding up. I think, again, it's, to me, is telling a story of digestion. Yeah. February 13th, here's my note. I always recommend, well, it's been recommended to me, I recommend it to all y'all, is to plot your notes what you're thinking. February 13th, at the close, bought shares due to the weakness seen in February. Now, okay, I've got 6% of my portfolio is invested. You can see how little I have invested. And that's because we were stopped out back in January 25th, and now we're making our way back in. May not be the best strategy. It's probably better to just stay in it, but it doesn't make it any more fun. I'm not here to give you the best strategy. I'm here to just reflect on what the heck I'm doing. Weeklies. Weekly, also another favorite chart of mine. It's painted up. Haven't really jotted it up too much, but one significant improvement that we have here, and I do expect some consolidative behavior now that I've noticed this, is the 10-week moving average has crossed above its 40-week. I think that's a significant development, and that tells us that there is some real strength in the market. If we have any sort of pullback, I would guess buying would be a good idea. If the Federal Reserve doesn't really shake the boat too much and inflation just sort of peters down and earnings sort of hang out where they're at, we don't have a drastic pullback, I think we should have a rally in the books. Okay, so we're back and recording. This is a new one that I have. This new tool. I can't really pause. That does suck. But let's go back to here. We're looking at the weekly chart. So we're again seeing some strength. The 10 crossed above the 40. That's indicative of strength. And our MACD histogram, I did draw this a little bit preemptively, I think. So I'm going to go ahead and get rid of it because our price has actually, no, you know what? We're just actually going to keep it there because we can go back and learn from it. But we had a high here in the histogram, and now we have basically another high almost at the same level and price breaking above this point. So another bullish feeling. And on a monthly basis, price is above its 10-day moving average. So that is a good thing. Have noted that February is the weakest month, and from before as well. I think it's a good time to accumulate. Okay, and Elder Impulse. No, that didn't show up either. Okay, forget it. Let's go into breadth. I think my computer's working over hard right now and having a problem. Okay, so here's a weekly look at the S&P. We got the 200-week moving average. We got the solid trend line. And what do you see? Area of resistance, resistance, support, 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 and support again. So we've had major areas of support. We're seeing price bounce off support back in, my estimation is probably October. And the new highs list as well is making some move upward. It is just broke above that zero line, and that is typically been a point of growth for the stock market. You can see here these orange lines line up perfectly with the zero line, and we have a subsequent rally in markets. Sorry for all the phone calls. I do work during the day as well, but we have the type of job that gives me the flexibility to turn off those phone calls. Okay, New York advancing and declining line. We see this constructive look here, again, painting towards the overall bullishness that is warranted in this market. I think the bullishness is warranted. We are having breadth across the board on volume basis, on a price basis, cumulative basis. I think it's looking really good. Okay, this is a look for retail stocks. Retail stocks can tell you where the market's headed, sort of not that, what the consumer is thinking. If the consumer is bullish and spending money, then that's good for the economy. Just to read through this bottom chart I have here is a relationship between retail stocks and the broader market. Um, Interestingly, retail stocks basically peaked out in 2020 and have not been exceeding the broader stock market. So if we see a pull through in retail stocks here, meaning if we start to see retail stocks do better than the S&P, um, that could be an indication that all stocks are doing well. Doesn't mean that it's a green light to buy the market, but or it doesn't give us a green light to buy retail stocks. It kind of tells us more about what is happening with the broader market. Christ, man, how many calls does a guy got to get here? Yeah, so many. Pocket dials, all that. Another interesting breadth tool is the number of stocks above their 50-day moving average. So right now we have about 70% of stocks above their 50-day moving average. That's pretty bullish. That's really bullish. And we have our slower moving indicator here below on the MACD, and that's crossed bullishly as well into the beginning of the year. Another strong factor, and prices above its 40-week. So all these things are making me feel like you need to be even more bullish. There might be another 15 to 25% to go in the market. Here is a US highs and lows, a 5-day total. And in January, we broke up positive and we're holding up. What we want to see it do is stay around this level, which is good and natural because we'll have the big rally, every stock participates, and then a lot of them get sold, and certain companies with real stories, real earnings growth will continue to catch bids. So this is a bullish sign. We haven't had this type of look in over a year. Okay. This is another look, but it's a lot larger view. It's from a monthly perspective. Looks like the S&P from a 26-month moving average has some work to do, but by the time it gets up there, we're well on our way on a bull market. So yeah, this line that I drew here is between minus 300 and zero. To my eye, a lot of the action was happening in between here. If we're above or below, what tells us what to do. So if we're above the blue line, meaning breadth is pretty strong. What else can I show you? Okay, here's my green line buy point. Basically, if the number of stocks below their 50-day moving average have gotten below 25, it should gain our attention, because at that point, it's easy to argue the stock market is heavily oversold or heavily sold, and it may present some opportunities. So you can see here, if we had started buying stock back in the lows here around 2022, back down here, it's proving to be a pretty good time. Not, you shouldn't look at this as hindsight, but um, this many weeks it's hanging out here, we should be buying. Same thing here, 08, 09, start accumulating, and then look at this massive run. Here in 11, good time to buy. 16, hanging out down here, pretty good time to buy. 18, 20, and 22, same sort of story holds. We're seeing a thrust, strong move in the Nasdaq. I think this strength is going to carry through. I think the almanac traders are going to take the market up. 82% of stocks in the Nasdaq are above their 50-day. That is wildly bullish. Yeah. And you see this, it's holding up here relatively soon. So we sold off, we were up at 80, sold off, back up again. So I think there's buyers, there's real buyers. I mean, just anecdotally, even in real estate right now, although prices are super high and not everyone can participate, there's still tons of people out there with money looking to buy. 6% for you and I might be a lot for a $1 million, $2 million mortgage, but there's quite a few people out there that are still doling out the cash. Houses are still getting tons of bids. Just a house down my block went over asking $290,000, although it was priced much lower to attract buyers. It went over by 290,000, and it had 54 offers. Quite interesting. I'm sure a lot of those offers were on the low end, but the point is, there's people out there looking to spend $1 million or more. Okay, so Nasdaq looks really strong. Let's look at the McClellan summation. What does this tell us? I actually don't understand this very well. I just started to notice a pattern. Um, let's just skip this one. Sorry. We're all in this together, learning what's what. Intermarket, the U.S. 2-year Treasury yield and the Federal Reserve rate we can take a look at. So we have just met up. You can see here in the past. What do we see? We see that when it gets together like that, it seems like the market and the government um, agree on what rates should be at. They're sort of at the sweet spot. But then you can see that over time, um, they start to separate. The market moves before the government. I think that's the biggest takeaway for myself is how quickly the market can move. When it's times of crisis, like instant crisis, like we saw in the pandemic, um, the market doesn't move as fast. But like shortly after, just months after the change in policy, it really moves fast. Actually, I'm going to take that back. I'm going to say the market always moves faster than the government. It always does. You can see even here, the expectation of rate hikes was started to be baked into the last half of 2021, not even in 22. So that's interesting. Yields did perk up again. Um, so prediction prediction would say that rates are going to be probably held up here for 12 months, and then rates will probably be cut. I'm going to go out on a limb and say rate cuts probably in 2024 to give the economy some perceived juice, maybe even late 23 before the presidential year comes about. I think there will be some rate cuts. But that's just sort of the conspiracy thought in my head. So that was our intermarket. Another one that's really interesting is the relationship between lumber and the market. We have lumber to gold here. So lumber and gold, what's the relationship? Lumber is very cyclical and tied to the economy. Gold is safe and not tied to the economy. So if lumber is moving, the prices are going up, that can pretend that the economy is about to pick up. The broader economy is about to pick up. If you see gold doing better, then maybe there's panic, concern, or no appetite for risk taking. What we're seeing right now is the relationship between lumber to gold has been in favor of gold. Actually, lumber is not doing too great on the expectation of slower economic growth, higher interest rates making it harder for builders to build, making it more expensive to buy this commodity. So we'll see how this pans out, although gold really recently has taken a bit of a hit. Okay. And here's another chart that I kind of put together is the Dow Jones at the top, the federal funds rate below, and the PPI. So, and I've got a rate of change on PPI. The reason I have this here is to just give me a look at PPI data, inflation data, rate of change of inflation versus what the Fed's going to do, and what the market does. So, what we have seen is a significant falling off in the rate of change for inflation. The PPI measure is looks like in negative-ish territory. So we're getting a mixed bag on inflation. I think PPI might move faster and CPI might be a little bit more delayed. I think CPI is including a lot of consumer-based goods and services, and that might be kind of skewed because the labor market's really strong right now. And the strength in the labor market might be skewing CPI, but maybe from an industrial point of view, from a business point of view, there is some pullback. We are hearing the recession is like a rolling recession, meaning one sector after another is taking a hit. Financial services is taking the largest hit because it's tied to rates and people are super sensitive to that. Okay, so I think I've been blabbing on for a long, long time. So that's two intermarket um, charts. We'll do a few more and wrap it up. This is commodities and the stock market. Commodities were in a bull run from 2020 till about 2022. And since then, it's sort of peaked off and falling down. This may be on expectations of a deflationary environment. Like I was just saying on CPI, industry and business, some sectors are facing recessionary elements or disinflation. So this just might be that happening in commodity prices. So maybe things are going to slow down or an expectation of a slowdown. Oh, wanted to show you guys the dollar. Yeah, the US dollar. So interestingly, the US dollar has quite an impact on the stock market. And that's because a lot of companies in the States or just globally, they operate internationally. So a lot of American companies operate internationally in Europe and Africa and Asia, China. And so they got to report in US dollars. If the US dollar moves up against those other basket of currencies, when those profits by those American companies like Tesla or Microsoft come back onshore to the United States, they make less. So if you're a strong dollar, you make less when you bring it back. And what I've drawn on this chart is sort of a recent relationship between the US dollar and the stock market. Um, Maybe nothing, but to my eye, I noticed something. We here back in March, the US dollar sort of paused a bit, and you saw a rally in the the stock market. Again, we have basically the dollar going nowhere from June to August, and we had a rally. Now, basically from October till now, the dollar has just deteriorated, and we've had long sustained strength in the S&P, which we see up here. So wanted to show you guys that point where the dollar um, falls or moves sideways bodes well for the stock market. We are seeing some strength in February come back into the dollar. So I wonder what that is. But it's a pretty good move too. from February. We'll continue to monitor that. How are we doing for time? 4:30. Okay, I got to bounce out of here. The US dollar monthly look. This is a really, really long-term look going back to 1983. And what we see is something really interesting. At the $100 level in the dollar, it's an area of significant support and resistance. Um, it's been historically a point of resistance. You can see in the 80s and 90s, never got above 100 level. In 97, it tried a lot to get above, but it took about a couple of years, and did spend some time above. But then in 2001 till basically 2014, the dollar has been pretty subdued. Now it looks like it's woken up and hanging up above the $92 level, $95 level. So you'll see resistance again, broke above resistance, and now it's holding above it. And that may become an area of support we will see. That's our US dollar monthly. And something interesting I saw online was the relationship between energy, financials, and technology. So here is the XLE and the energy sector and the tech sector. Energy has been kicking technology's butt for the better part of 2.5 years. And the last time it did something like that was in the year 2000. So now, does energy continue? I don't know. I think if prices stay up where they're at and these companies continue to be fiscally smart, as they say, should bode really well for their bottom line, their earnings, and that should drive their stock. Here is the XLF and the XLE, so financials and energy. For the longest time, financials were beating the energy sector basically for the last 10 years. Um, Now we're seeing a bit of a pause in that. We'll see how the turns out. But this is a dynamic of inflation in my eyes, because financials do well in an inflationary environment, and so do energy companies because it's carrying a commodity. So interest rates and oil price, if they stay buoyant, it should be good for their profits. So we'll see how this relationship works out, which one does better. It does seem like when you hear about these companies, they're really well run fiscally. The relationship between financials and energy, um, financials and technology. The biggest interesting point is here is how the relationship broke down so much for financials that now financials are showing some strength. So will financials become leaders? And another one is relationship between discretionary and staples. So discretionary stocks are more sensitive to the economy. Staple stocks are less sensitive. And what we're seeing is some strength in discretionaries. So why we look at this chart is to see where money is flowing. Discretionary is risk on, staples is risk off. So money is, from this chart, going into discretionary names. That is a bullish sign for the market. So everything we're seeing right now is bullish. And I can only suggest that you have some exposure to the stock market, um, because there are a lot of factors at play that can bode really well. And the biggest one would be the massive drawdown that we've had. There's opportunities still persist. Technology has a lot of opportunity. Okay, this video went way longer than I wanted it to be, but who cares? We're trying out a new software. If you like what you saw, give me a thumbs up and a like and a subscribe. That would be great. Not that I'm looking for them, but it would be appreciated to get this up and running and monetized. Okay, monetize what is fun.